Wow, biggest drop in history of the Dow Jones. Biggest in dollar amount, but not in percentage. Now, is this a market crash or is it a market correction? Obviously, nobody knows.
Has anything fundamentally changed when you see these aggressive moves, both for the US and Asia, on days where there's not really been much in terms of what's been on the macro calendar to move things or to change things? So what's really driving this?
If you watch the news or Bloomberg News, here's what they say might be factors that are driving this sell-off.
Yeah, it does appear to be turning into a much wider risk aversion event. If there was one single trigger, it appears to be last week with the wage increase numbers in the United States. For a long time, we've been told that inflation is nothing to worry about.
So they're saying people are worried about the wage increases. It's causing inflation. Labor is becoming more and more expensive. Therefore, the extra cost is going to be transferred over to the consumers.
It's very stable and there's no sign of it coming back on the horizon. But if wages are starting to go up in a very tight US labour market, then obviously it can't be too long before there is a risk that we see that feed through into the inflation numbers. We're also in a period, of course, when market valuations were very high. There may have been some overextended positioning at the same time. And also we've got a change of Fed chairman, and it's not unusual in the early days of a new Fed chairman for there to be a little bit of uncertainty, investors to be a little bit cautious until they hear from the new person in charge as to which direction he wants to go. So all of those things are coming together at the same time, and that is probably what's adding to the anxiety that we're seeing play out in the markets today. Heidi?
Yeah, Mark, particular anxiety playing out in the Japanese market. We've seen that 10% lower. If we test some of the previous, I think, down phases, you go up to 26% when we saw around 2015, 2016. But you just wrote a little note about what could actually happen to dollar yen, and that could actually just exacerbate the sentiment side of things if we get a markedly stronger yen out of all this.
Yeah, certainly. That is often one of the things that we see. When risk aversion becomes very serious, dollar yen tends to go down. And the fact that it's been fairly steady recently.
We're down over 1,000 points, but there was that point when it was just in free fall. That is stopped for the moment.
That's right. I mean, with computer trading today, these kinds of swings come with the territory. This is the biggest Dow drop point ever.
Ever.
Right? I didn't quite say that correctly. The biggest drop is down, right? And the biggest was 777 back in September of 2008. But in terms of percent change drop, we're not even close at that 4% drop. We're not even close into the top 20, anywhere near that. So it's a very difficult day, and a lot of us are feeling pain. But historically, this is something that happens from time to time. Not that that makes it any easier.
Miles, let's dig into a little bit of the pain points here. Right now on the Dow, we've got,
So this expert says that this is something normal that happens from time to time. So that means we shouldn't worry about it, that it's an excellent opportunity to buy, to get in. Now, I'm going to try to buy. I don't have available cash though, unfortunately. I have about 2,000. I wanted to buy some Bank of Nova Scotia. I could buy some Ford again. I could buy some GE. I could buy some Kraft Heinz. Everything went down. So I'm gonna choose a stock or maybe two stocks. I'm gonna split up my 2,000 and put an order on two of these stocks. But I'm gonna put them a little bit lower because I think prices are gonna continue to drop a bit. Hopefully it's not going to be another market crash like in 2008, but it looks like it's just a market correction. So it's a slight dip. It's basically an opportunity to buy, and then it'll continue to go back up. Basically, they said January's gains just were lost completely. So we only lost what we gained in January. So it's as if January never happened.
6 stocks up more than 5%, leading the way Exxon and Chevron. We saw this last week as well. The thing to point out here is, this happened on Friday. We had a sell-off also. So this isn't just a one-day event. Is that part of the concern here?
I mean, I just think it's clear, especially when you look at the shape of the sell-off, both Friday and today, where we came in, we were down sharply. Friday there was less of a bid during the midday hours, but today we almost got back to green for the Dow. I think the Dow was down 7 points or something like that. The NASDAQ was up about 0.2%, right around lunchtime. And there's just no buyers out there. When we just saw the selling was relentless through the afternoon. It did sort of come to that crescendo where you just had phantom bids out there at that 3 o'clock, 3:03 time. We went down to that 1500 level. But given how close we are to the lows of the day, we're 1,000 points right now, it's just clear that there's no appetite for buying. I mean, there's just on a wholesale level, right? We've seen so much money come into the market at the beginning of this year. We've seen the market go up 7% in the first 15 trading days or so, and the appetite is just not there anymore.
And I really will say that you're spot on with that. I call it the January effect. The January actually is what turned us wrong, I think. I mean, so many people put money in. In fact, Bank of Merrill Lynch shows that there was investor levels were down to 10% cash, the lowest it had been in a decade. So people were just flooding the market.
Well, now it's like January didn't happen, right?
Yeah,
we
we're
raised our gains for the whole
slightly
month.
negative for the year.
Right.
So we're basically back to where we started, and I think then we're really going to find out kind of what the market's made of. I mean, the bulls and the people who have a longer-term view, which is absolutely commendable, and really the way you should be thinking about this, will say, okay, fine, we're back to where we were a month ago. But remember, in 2017, we weren't challenged at all. There was no point at which the market seemed difficult, and now we've had a 6-day swing where all of a sudden, poof, it's all gone.
We also are very mindful of the fact that we have all kinds of investors watching. I know some of you are big CEOs, others are huge high-frequency guys, and then we have the retail investor, the smaller investor. Jerry Willis is looking at that angle of it. Jerry.
Hi, that's right, Liz. So if you are a small investor, no doubt at this very point you're wondering, what do I do? What should I be thinking about? Do I sell? Do I sit tight? Look, there's no shame in doing absolutely nothing right now and waiting to see this settle out and what's going to be happening. Remember, at the end of the day, what professional investors are thinking about, I know there's the algos, but there's also a few human beings there as well. They're thinking about how has the world changed? What is different about the economy now? And what they're seeing is faster growth than they anticipated. They're seeing rising inflation. Those are fundamental changes that make you reevaluate what you're invested in. So you're seeing lots of changes that probably will be coming over the next weeks. You know, Liz, I took a look at how many corrections we've had over time and what that looks like. We've seen 6 in the S&P 500 over the last decade, plus, of course, the bear market. And these play out over days and days and days and days. So it can take a while for this to wash through. You know, you hear these professional investors say, oh, we want the pause that refreshes. And that may be difficult for it.
So everyone has their own opinion. There is no true answer. It looks like a market correction. I don't think it's a crash. That's my opinion. Because if it was a crash, it would go down much faster. If you look at 2008, it dropped much faster. So I definitely see it as a buying opportunity, but maybe not today. Just wait a bit, watch, see what happens, and then I'm gonna buy. I'm gonna buy in for sure. Fortunately, I don't have enough free cash, so I'm gonna have to pick my stocks. Won't be able to buy everything. Everything went down, so I want to buy a bit of everything. I could probably buy some Vanguard shares. Vanguard US Total Market ETF. So this is an ETF that covers looks like this one covers US Total Market. See, this one dropped, of course, but it's usually safer because it's diversified. So 46, 52 week range, 49, 41 to 49. So if you want to play it safe, you can buy some Vanguard shares. Look at the ETF that you're interested in. Total stock market. 132. Wow, it's dropping hard. 130. So even pre-market right now is dropping. So it's really, there's still some. So I wouldn't buy right now. I would wait a bit. So this was actually trading at 146. Today it's going to trade at 132. 10%. I'd watch definitely the stock market. Pick a stock that you're interested in. Definitely buy in, but wait a bit. Maybe towards the end of the week. I'm definitely going to buy something. I'm looking at Bank of Nova Scotia. Might look at Vanguard also. Looking at Johnson & Johnson. Looking at American Express, definitely. It's at 92. At pre-market is 86. Definitely looking at American Express. It's on Warren Buffett's list, so for sure look at American Express. See, pre-market is 86. 52-week high is 102. Pays 1.45% dividend, but more importantly, pays 1.45% dividend. But more importantly, it's on Warren Buffett's list, so it's definitely a stock to own. 1 year target is 107, but I'm sure that's going to change a bit. 52-week low is 75, so yeah, maybe at 80. Maybe at 80. If it's not a market crash and just a market correction, buy at 80 for sure. I'm definitely looking at American Express now. Kraft Heinz, 73. I had bought it at 77. AMD also, the big chip maker, 1105. Yeah, everything's still going down. Wish I had more available cash. Guess I bought too early. Procter & Gamble, 80 per. Wow. I just want to buy everything. Capital One Financial, GE for sure, 1477. Wow. Had bought it at 17. Bank of America, Bank of Nova Scotia for sure. Bed Bath & Beyond, everything really. Just pick a company that you like. Ford for sure. Definitely Ford. Because you can tell it's not an issue with the companies that they're performing badly or they're losing money. It's just a general market correction. So it's definitely a buying opportunity. But when should you buy? When should you get in? Personally, nobody knows, of course. You're always gonna have experts' opinions. You can check them out online and form your own opinion based on what you hear. But I think it's just a market correction. I'm gonna watch a bit. Probably end of this week I'll buy something, or I could place an order at a price that I think is very low or very attractive. If it goes through, then good. If it goes even lower, well, I'll just have to wait longer. So let's look at the effect, how it affected my portfolio. So under QUESTRADE, my balance. Here's my position. I'm at a loss of $158 US because I bought Ford at 1091, but it's at 1024. But it's actually trading much lower now. Pre-market is 1013. So this number, it looks like it's gonna hit the 9s for sure. Obviously, Investor's Edge killed me. I'm pretty sure I was at 15.5, and I'm at 14.1 right now. But I'll just have to wait. I have 2,000 available cash. That's the only thing I can use right now. So I should use it wisely. I could either buy, I'm thinking Bank of Nova Scotia. I'm going to split it up, maybe Bank of Nova Scotia and something else. Maybe a US stock. Maybe GE or Procter & Gamble. Something with a big name. I'll see. Prepare your accounts and get ready to buy. This is definitely a buying opportunity. So if you enjoy my videos, please like, share, and subscribe. If you have any questions, leave them in the comments. If you're going to open an account with QUESTRADE, please use my referral code at the bottom of the video so we both get up to $250. Thanks for watching.